welcome to the Startup Funding Espresso. I'm Halti Martin, the host of this show where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Halti Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Your financial projections will be important for your fundraise. Banks will want to see your projections when you apply for a loan, and investors will want to see them as well when you raise equity funding. There are two basic forms of capital, debt and equity. Debt is in the form of a loan with specific terms including interest rate and payback plans. Debt has some advantages. You maintain ownership over your business, interest is tax-deductible, and debt can keep management focused on the core business, in particular cash flow and profits. Equity has advantages. You don't have to pay it back immediately, but only when you sell the business or go public. Your financial projections will help you decide how much funding you should take from debt and equity. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.